Hey guys, I'm Fred Carlton, one of the leaders here at Syndicate. This is Cameron Labrie. Today we're going to go over some common objections that you hear most often in the field. So Cameron, you've been doing this for a very long time, very experienced insurance agent. We're going to hear the most common objections. The most common one is usually too expensive. So what do you say when they say, oh, this is too expensive?
Absolutely. So in those scenarios, what I'm typically doing is I'm acknowledging, like, yep, I get it. You think that this is too expensive. And then I'm going and saying, hey, if it's too expensive, what is the alternative if something does happen to you? Right? So it would be something like this if you wanted to say it in the sense of you being a client right here.
Yeah, Cameron, it's just too expensive for us. We can't afford it.
Totally understand, Fred. You know, a lot of people felt that way, but as soon as they found out that we could get them something more affordable that did fit in their budget, they wanted to get something like set up. Unfortunately, when you say you can't afford it, you probably can't afford to have it. So that's why we'll find something in your budget and make sure moving forward you've got the protection that you need in place.
Okay, awesome. Now, is there a particular framework that you use to kind of...
Absolutely. So in that scenario, right, I did a feel, felt, found, right?
Found.
I was able to, I understand where you're coming from. A lot of other people felt that same way, again, providing that social proof. And then as soon as they found out, which is that solution, they ended up wanting to get that set up as well. Okay,
Gotcha.
And then acknowledge that, hey, yep, maybe it is too expensive for you. Maybe that option is too expensive for you. And then moving on to a product or maybe lowering the actual amount of coverage to get them something that does fit within their budget so that they still leave the call with the protection they need.
Amazing. Awesome. Great, Cameron. Thank you for that. Now, obviously, the next most common objection that we're going to hear is just a simple, flat out, not interested. What do you say when you do that?
So, yeah, in that scenario, right? So oftentimes when someone says they're not interested, everything is a smoke screen in sales, right? So if they say, hey, I'm not interested, okay, totally understand, Fred. I guess, what is it that you're not interested in? I don't think we've actually gone over anything yet, right? Mm-hmm. And so in that next step of that call, right, what would a client typically say in that scenario, right?
Yeah, usually the client doesn't allow you to get too much talking points at that point. They're just simply saying, Cameron, we're not interested.
Yeah, and so I'm acknowledging that they're not interested. Say, hey, we haven't really gone over something yet, right? I guess, what is the plan to cover your mortgage in the event of death or sickness? And I want to go into that next phase of the script or the next phase of the sales process. At that point, they're going to simply go, hey, you know, we're all set. And then you're getting to that next thing. It's normally they can't afford it, or they don't understand it, or they sometimes feel they don't need it, and they feel like they don't need it because it's back to they don't understand it. So it's a couple different things that, again, it's that smoke screen there. So, and then you're allowed to get to that next objection, which is either, you know, really the price, or they feel like they've already got something set up.
So the key point here is really to just keep the conversation going.
Exactly.
Right?
Yep.
And then really get to the real objection. So you're trying to isolate the real objection rather than kind of giving up at that smoke screen.
Yeah, and what you're doing, especially in that objection, is the ARM method, like we've talked about before, which is acknowledge, respond, and then you're going to move forward into that next part of the script and keep the call moving again while holding control of that whole conversation.
Talk about a little bit about that control factor. Why do we?
Dude, I love you right now. I just want you to know that. You're like a talk show. I love it. The control factor is so important because if you don't have control of the call, right, the client has control of the call. And if the client has control of the call, then you've lost all ability to sell them, right? You want to make sure that you're controlling the pace of the call, controlling the actual information that they're hearing, right? A lot of times clients try to take the control. This is where I see a lot of agents, they let the client take control. Like, well, hey, I want to hear price right now. Hey, I totally understand, Mr. Client. You know, a lot of people do want to hear the price as well. But again, I need to ask you a couple questions to make sure that you're even really a good fit for our product. Does that make sense?
Yeah, awesome. So you kind of use a little bit of scarcity there where it's not a good fit for everybody.
Exactly,
right?
Exactly. And it's almost like a takeaway as well. So it keeps their curiosity
to a certain degree.
Exactly.
So far, you've kind of used a few different methods here. The feel, felt, found method, the ARM method, acknowledge, respond, move forward. You've used a tie down or a takeaway. So the feel, felt, found method, you're using empathy. You're saying, hey, listen, you're not alone. And then here's the solution that we found for other clients. With the ARM method and specifically not interested, you're just trying to keep the conversation going, get past that smoke screen and isolate the real objection.
Exactly.
Okay. Awesome. Yeah.
Something else too, again, busy, important, and control, like we've stressed that before when you're setting the appointment, but it's also important when you're in the appointment as well. Sometimes people will go, they say, hey, I want to think about it when you get through to it, and then it's like, well, you're handling those objections. Hey, I totally understand. I guess my question is obviously this is something you feel like you need. And again, I think we meet the budget. So I guess my question is, before we get off the call here, I guess what is it that is making you want to think about this further? Okay. And again, if they still like, oh, I don't make a decision. Some people just don't want to make a decision right then again, you're busy, important, and control setting that next follow-up to appointment. And then once you finish up setting up that follow-up, okay, next time we talk, Fred, we're going to make sure this is all set up for you. Again, assuming that the next time you're going to close and put an application through.
Got it.
Again, so you're using those frameworks.
Those expectations.
Exactly. And you're using those 3 frameworks, the ARM, the busy, important, and control, and the feel, felt, found. If you use those frameworks within setting appointments and in the appointment, you're going to be fine.
Amazing. Awesome. That's some really good material there. I would say that a lot of times we get the I'm good, we're not interested because we have savings.
Okay.
So how do you say that? What's the most important thing with life insurance, and why should somebody listen to you if they have savings in their account?
Yeah, so I mean, again, I wouldn't necessarily always use this saying, but they say, life insurance is a rich man's luxury and a poor man's necessity, right? Now, if you have savings, I guess my question is this, unless your house is cash flowing, which for most people it's not, why would you not just pay off the mortgage and have no debt? And the answer is that they normally just don't have the savings, or it's tied up in a 401k. Now, if you took your life insurance exam, in the life insurance exam, it talks about the tax repercussions, if you will, for taking out money out of a 401k. Now, if you're taking it out when you're supposed to, it's a 30% tax liability for most people, right? So if they have $100,000 in there, that means they really only have $70,000 in there. So again, stressing the importance of the tax liability. Also, when you save money in your retirement, right, you want to use those for savings and retirement, right? When we're simply telling them, hey, for $100 a month, $200 a month, if you die, the insurance company's got it, right? They understand that they allow someone else to take the risk all the time when it comes to their car insurance, their homeowner's insurance. Most people have insurance on their phone, but a lot of times the one thing that isn't replaceable, which is themselves, you as a person, right? They don't seem to stress that. So make sure they understand that, hey, when you're dead, and don't try to beat around the bush and say, hey, when you die, or when you go peacefully go to rest or whatever. Sometimes people are so afraid to say when you're dead. Because that's what happens. You're dead.
Just being direct, yeah.
Yep. There's no income.
Right.
There's nothing else coming in, right? And something I like to say as well on top of that is, hey, how many people, Fred, if you were to die tomorrow, are going to line up at your door with $1,000?
Yeah, not many, I would assume.
Not many, right?
Yeah.
So then those savings are all you have.
Yeah.
To cover the home, to cover the car payments, to cover the cable bill, to cover the internet bill, to cover the kids' medical bills, to cover your medical bills. So you're telling me that they're going to cover everything? The answer is no.
So how would you get there quickly? Because a lot of times when you're going to hear that objection in the very beginning of the conversation. So what you're saying is the biggest thing is the tax liability. And in addition to that, you want them to acknowledge and understand that they should have the insurance carriers take on that risk rather than taking away from their savings.
Exactly.
So how do you get there really fast? Because that's going to be that's going to be an objection that we hear within the first 10, 15 seconds of the call.
Yeah, so I say, hey, I totally understand. A lot of people, they, again, using feel, felt, found, a lot of people felt that same way, that they've got the savings. But as soon as they found out and went through and were able to have us ask a couple questions, they realized they did not have as much money or as much as they needed to get everything set up. So let me ask you a question. If you were to die tomorrow, Joe's income is no longer there. What does that really look like for you? You said you got a couple $100,000 saved up. The mortgage here looks like it's $400,000. You're just talking about the mortgage. You don't even have enough money necessarily to save for the whole mortgage. And then it gets them thinking. To get them, oftentimes in sales, right? An okay person is asking yes or no questions. A great salesperson is getting to actually think. And make them realize, oh wow, there's it's right brain, left brain. They're really like using their whole thought process here. Like, oh wow, like I really don't have the money, because they haven't actually thought about it. Because no one wants to think about the worst situation, right? A lot of times they hope for the best, but they fail to plan for the worst. Our job is to help them plan for the worst.
So once you get them thinking, and then they respond to you with the questions that you're strategically asking, and making sure that they are taken care of, because that's the whole point of life insurance in general.
Yeah.
You want to move the conversation forward. So what do you say is a kind of a close? Do you take in regards to the control factor that you talked about? Do you take control back and say, here's what we'll do?
Exactly. So in that scenario, right? Like we've kind of moved forward past that objection. I say, all right, Fred, but grab me a pen and piece of paper. We're gonna go over everything and make sure that you're fully set up. And then I'm just grabbing control back, and then I'm going on to the next aspect of that script. I'm re-verifying the mortgage. I'm re-verifying their information, and then I'm again building the need by asking them a couple questions. And oftentimes, again, I always say this, there's 3 times people think about life insurance. It's one, someone close to them died, they either had a near-death experience, or I'm there. So why not make it easier on them, and let's just talk about that while I'm there, right?
Awesome.
And again, stressing that to them as well.
Okay, great. Now, Cameron, we hear a lot about life insurance already having it in place, a lot through work-related policies. Do you find that you're often doing policy reviews with customers that already have life insurance?
About 50% of what you're going to produce is through policy reviews. I think oftentimes we work with people in other realms of our life who you're like, wow, that person's not really that great at that job. Think about it. There's 970,000 life insurance agents in the United States, right? How many of them are going to do a great job? How many of them, many people who are going to watch this have been in situations where they haven't been trained well. Do you think when you first started your first couple months that you were giving that client the best policy? Maybe you didn't even have the access to the best policies, right? So right off the bat, you know that they probably don't have the best coverage. So by asking a couple questions, hey, Fred, if you just look, again, my job is to make sure you do have the best coverage in force to cover that mortgage in the event you die or get sick. Let me ask you a couple questions. When did you get that policy set up?
It's about 2 years ago.
2 years ago? Okay, awesome. I guess, do you know the name of that company?
I think it was called American Amicable.
American Amicable? Okay, awesome. And I guess, do you know how much coverage you have in force?
I think maybe about 200,000. My wife has all that information.
Okay, so right there, I'm gonna zero in on that, because if that client doesn't really know what they have in force, they probably didn't have an agent that explained it super well to them. So immediately I'm like, okay, hey, how about we'll do this, Fred? Right? You're gonna win either way here. Either you're gonna have the best policy in force, or you're not, and we're going to get you something that is the best policy in force. Either way, I have to work as a fiduciary, which, by the way, you do with a life insurance license. You can't just set someone up with something because you want to. It has to be best for the client. Re-verify that, retell them that, let them know, solidify that they understand you're doing what's best for them. And oftentimes they're like, oh, yep, let's set up a policy review. They pull up those policies, and all of a sudden they realize, wow, I only have $30,000. And you're able to get them something that might be the same price for more coverage, or they may end up buying more insurance for you because you actually went through that time, made sure that you built credibility, and then you're actually getting something set up that is obviously more of a value add for them.
Awesome. And if you find that their previous agent set them up properly, of course you're telling them that as the fiduciary, right? And then and then of course
which is great though, right?
At least gives them the peace of mind knowing that they're taken care of.
Exactly, and most of the time that's not the case. And if it is, oftentimes they may still buy another policy for you, or they're going to give you referrals saying, wow, this guy really did care about me. Let's say you've got, I've got this policy through X insurance company, and I've got an accidental policy through Y insurance company. Fred, you know what? I can definitely help you with the X insurance company. There's a lot I can do there, but I will tell you that Y insurance company, they just do a better job. With that type of policy than we can offer for you, and I don't actually suggest you making a change there. Immediately, you build credibility, you build trust. That kind of continues with the rapport building process. They feel like, oh wow, this guy does have my best interest in mind. And again, when you're pitching the price for the policy review too, and maybe you're suggesting, hey, ethically, I can't, overinsure you. Legally, I'm not going to underinsure you. So I do want to make sure that we are, setting the best product up for you and the best coverage up for you. And sometimes too, like for example, if they're like, well, I want $1.5 million. Say, you know what, Fred, I actually think you only need 1.1. And so you're actually bringing it down a little bit. And oftentimes like, wow, this guy's really not trying to push and sell. And it actually becomes more of a conversation than a sale. And the big thing to understand in sales is it's not, I'm trying to get one over on you and make money off you. It's just simply believing, I believe in life insurance. Now I just need you to believe in life insurance. It's literally just a transfer of belief.
Yeah, I love that. That's great. Transfer of belief. That's a really good nugget. Now, what if they say it through work? They have life insurance through work, because we get that often, right?
Okay, yeah. There are a couple things you can say there.
Right?
A couple things you can say there is the first thing is say, Fred, I guess, do you just never plan on retiring?
Oh, no, I plan on retiring.
Okay, yeah. So I guess you understand, as most people do, right, that when you retire, lose your job, quit your job, get fired, that you lose that coverage. That's not permanent. I'm sure you know that. So, a lot of people want to get something that's set up that's actually permanent, that stays with them. So when, if they do lose their job or they retire, they don't have to worry about not having any life insurance or not qualifying at that time. So, I guess my question is, like, what do you have in place that isn't owned by your work, that you own?
Yeah, I guess I really don't have anything outside of work.
And then you're able to go into that, right? Now, some people need kind of another explanation. A lot of times I use metaphors. I say, Fred, maybe you're not understanding me here. Like you don't own that policy. Here's how insurance works. It's called group term insurance, and it works like this. Like let's say, Fred, what's a vehicle that you really like to drive around?
I like my truck.
Okay, what do you own?
F-150 Ford.
Okay, let's say it's a company vehicle, right? A company vehicle, they pay for it. You drive that truck around, you love it, right? And then you retire, you're 65 years old, and you have to give that truck back. You really want to keep an F-150 though. Well, now it's 2035, and you could go buy that F-150 at 2035 pricing. And now it's a lot more expensive to insure. The oil changes are more expensive, right? And here's the thing that's even different when it comes to life insurance is that you only have to qualify for financially. Life insurance, you have to qualify with your health as well. So there's another component of that. So it's actually even harder to get life insurance down the road, and it's even more expensive. So again, that's a lot of times people, when they hear that, it allows them to understand, oh wow, that's a great way for me to understand, wow, this is going to be way more expensive down the road, and I don't actually own that company vehicle, just like you don't own your life insurance.
Right. Just like anything, if you wait, it's just going to become more expensive, more painful, right?
Exactly.
Gotcha.
Exactly.
Okay. And then maybe at that point you don't qualify due to health reasons.
Exactly. Yep.
Okay. That's great. So, and then the last one that we'll go over today, Cameron, is that they have it's a home equity line of credit, right? Some leads come through. Maybe it's a home equity line of credit only for $30,000 or $50,000. How do you kind of manage that conversation, specifically in the beginning?
Okay. I always say this, right? So sometimes they say home equity line of credit, they say home equity loan. Similar, the difference is you got to know the difference between a line of credit. A line of credit is like you might have $50,000, they may only use $10,000. A home equity loan is they've used whatever that is, right? I asked this question. I say, well, I guess my question is, Fred, if that weren't to, if you weren't able to pay that back, I guess what would they do? Well, they take my house. And if they say they don't take their house, we'll say, well, I guess how did you get that loan? Well, I went to the bank and they looked at the equity in my home. Okay, so you understand that it's a home equity loan, home equity line of credit. They're taking out of the equity of your home, meaning that it's essentially a lien on your house. If you don't pay it back, you're going to lose your house. Your house has been collateralized. The bank is in the business of equity here, right?
Right.
So if you don't pay it back, you're going to lose the house. Right?
Sure.
So we understand that?
Yep.
Okay. So let me ask you a question. What is the plan to cover that?
Yeah.
If you die or get sick?
I'm not sure. Yeah.
And then you go right back to the mortgage protection script. It's just a smaller mortgage is really what it is.
So you're utilizing a lot of these concepts. You have feel, felt, found, acknowledge, respond, move forward. What are some of the other ones that you really utilize often?
Again, you got to make sure you're busy, important. You're in control, right?
Yep.
You're asking a lot of open-ended questions. Notice a lot of those questions are yes or no.
Yeah.
Right. It's like, I guess what would the bank do? You want to make sure you're not using words like. You want to say what, who, when, not like would. Would is a yes or no question, right?
Yeah.
You want to make sure that it's open-ended so that it gets the client to think. And then another thing I like to do as well, and I suggest for a lot of agents, you should always continue to read, but it's from this book, Never Split the Difference by FBI negotiator Chris Voss. And he talks about reframing how you ask a question. So instead of like, hey, Fred, are you able to meet tomorrow? Fred, I guess my question for you, would you be opposed to meeting tomorrow at 5 p.m.? It's answering the same question, but it's a no to get a yes.
Just a different way of asking.
Exactly.
It elicits an answer that you're looking for.
And it causes so their brain has to really actually respond. You want them to not just essentially use the same pattern we always use, which is no, 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 no. You just want to get people off the phone. Now, if they say no, it's a yes. So now they're like, no, like they actually have to really understand what they're going into and make sure that they're paying attention and in the moment of what you're saying.
Awesome.
That makes sense?
That makes a lot of sense. Well, thank you, Cameron. That was really helpful. You've gone through a lot today. I'm sure there'll be more conversations to come.
Yeah, absolutely. That's why we do workshops.
Awesome. Thanks, guys.